Hey everybody, welcome to the garden. I hope you're having a great day. Shout out to the lemon and lime lovers and everybody in between. It's time for the market recap. Okay, so before we hop into the charts, just a quick reminder in case you missed it. The free trial for the swing trading service is now live. You heard it right. It's live now for the rest of November. So if you are interested in this service, this is the best time to take a look at it, see if it's to your liking, and if you like it, if it's successful for you, hopefully you'll stick around after November and pay for the service, which is, a cheap sum of $15 a month, okay? I want to make it as affordable as I can. And I believe $15 a month is more than fair, especially if you consider how often the trades have been winners. And if you don't like the service, well, this will be your validation, your vindication, and you'll know to stay away from it. And you'll know exactly what you're missing out on, and you won't have any regrets, okay? So, again, if you have any questions, make sure to let me know. And if you do decide to follow the trades, make sure to especially read this message here that I made on October 30th. It goes over a couple of recommendations on how to follow the trades, okay? All right, so let's hop on into the charts. We've looked enough at that. So we're going to start off with the Dixie, the dollar, as usual. And as you can see, currently still within this bullish structure. And I do think we're going to be within this bullish structure for quite some time. As you can see, we actually had a bit of a sell-off today. But as we're coming into the close of the stock market, we're actually getting a nice buy-up, right? So not too bad. However, this does not mean we're going super, ooper, duper bullish in the dollar that we're about to break out. It just means that we're likely going to slowly creep higher, potentially come even higher towards 112, and we'll start seeing a lot more resistance around that zone like we have been so far. I would be looking in the short term for more downside as we come towards this ascending trend line here, and then eventually make our way back up. And we're probably going to trade within this structure over a good period of time. And we have to remember that this structure is ultimately bullish. So let me go to a higher time frame so you can get a better view of what I'm looking at. Let me actually take away this line here just so it's a little cleaner. Okay, and I'm going to redraw some of these lines just so it's not as cluttered on the charts. I do want to make sure you can follow the actual data as I present it. So let's go on to the weekly, right? So on the weekly, what we're potentially starting to see here, especially if this ascending trend line on the weekly confirms. So as you can see, it has not confirmed a breakdown off the weekly time frame. If that's confirmed, we're likely going to fully play out this structure. Okay, and this is a bullish flag structure on the weekly, and because it's the weekly, that's a significant amount of time that we're potentially going to have a bullish consolidation. And as we veer downwards in this consolidation, potentially, obviously we're going to be looking at upside for a lot of the market. So a lot of the speculative risk on assets will start going up, and that includes a lot of stocks and most of crypto. So we're potentially on the cusp of a nice rally in the bear market, a bear market rally. But if, let's say tomorrow, which is big news, the Federal Reserve is going to be talking, they're going to release their data, the FOMC rate statement, and obviously the interest rate decision, and then we'll get the press conference. If that tends to come out a lot more hawkish than the general markets believe, a lot of people are leaning more towards the dovish side, more towards we're going to slow down on raising rates. If they don't, and they do hold steady at the current policy and decide to go 75 basis points, then we're likely going to see the dollar start ripping up. Okay, this does not mean though that we're going to rip out of this potential bullish structure, but it does lead to it does mean that we actually might, and this structure may not be fully mature, and we'll just break right on through. It really depends on how the Fed comes about, during the press conference and what their actual rate decision is. If it's 75 basis points, we'll definitely see a really strong move up, and then if they come in soft during the press conference, we may see the dollar come back down. Okay, but tomorrow's going to be very, very volatile. So we'll be making sure that we're keeping our eye on what's going on. All right. So next is, let's take a look at the Dow. So the U.S. Dow. So fighting at this resistance zone here, which is the descending trend line, as you know, as was expected. You know, it wasn't unexpected that this would be happening. With about hour 30 left, we'll see how this daily candle closes. If we close like this, you know what it usually means is obviously there's a bit of an indecision here, but in the context of this, you know, pretty large rise coming into resistance, we'll likely see at least best case scenario for the bulls is a bullish consolidation. But in my opinion, it's more likely we see a bullish retracement to these highlighted levels here, which are fair value gaps, to fill out this imbalance. Okay, so if we're going to have, you know, a bullish retracement, these are the zones I want to see filled out. And then eventually, as more liquidity is tapped, we may potentially see a move higher to then break through this descending trend line. And again, a lot of this will depend on how the Federal Reserve kind of comes about tomorrow. So for example, if let's say tomorrow they come out really dovish, really bullish on the markets, you know, for risk on assets, then we potentially are just seeing a rest period, and we're just going to blast off later this week, breaking this trend line and start attacking this high pivot here at 34,200, 34,300. Or if they come in with a more even hand, they try to keep the markets as steady as possible, then we may just see a bullish consolidation to try and get the fuel to break through. And then obviously if they do come in more hawkish, more hard-handed, heavy-handed, then we'll see that retracement towards these levels. Even if they do come in heavy-handed, I'm still fairly bullish on the markets during the winter period, but it will definitely extend it out and lessen the move higher. But I am personally banking in, or I should say penciling in, that at least in December they're going to be showing major signs of pivoting off of raising rates. All right, next is the S&P. So S&P, just like the Dow, tapped this resistance level here, minor resistance level here at this high pivot, and is slowly making its way back down, potentially under this level to grab the liquidity here. And if it's a really a prolonged drop, let's just say the Fed does come out hawkish, we're going to be looking for a drop towards 35.88 to 3600, and then potentially a rise from there. If we do get a nice day tomorrow, or I should say after the close, I believe the Fed will make their decisions after the close or just before the close, around 2-ish, then we'll be looking for possibly the S&P to drop early in the day and then potentially make a move higher if the Fed comes out fairly dovish. And then we'll be looking for this zone up here to fill out this small imbalance, and then eventually attack this high pivot and grab the liquidity that's been pulling above that pivot. And going on to the NASDAQ. So NASDAQ, of the three, definitely the weakest, but not surprising because percentage-wise, the NASDAQ is always more pronounced. So on the downside, it's going to have a much bigger move downside, and then on the upside, it'll have a bigger move to the upside. And as we can see, it's definitely trying to retrace the majority of this up candle here, and it probably will, unless tomorrow tends to be fairly bullish. We'll probably see that retracement, most of it tomorrow, going back down towards 11,150 and potentially 11,100, so back towards the actual level. So I would not be surprised if we do open up tomorrow fairly bearish, especially if the markets, or I should say the big players, are trying to get as much value as possible, knowing that the Fed is very likely to raise 50 basis points rather than 75. They may try and push the markets down early, or at least during the lunch break around 11 p.m. So watch out. Again, it's going to be very volatile tomorrow as we get closer towards the Fed rate decision. But I do think some games are probably going to be played by the big players early in the morning to the midday. Next, let's take a look at oil. So oil, having that bounce back up, and like I've been saying, we may get a push back down towards 85 and potentially even towards 75, and I still do think we get towards 75 and even towards 60 eventually. However, I have been saying, watch for the move higher as we come back to test this ascending trend line and pretty much the zone of $100. So, I had a couple questions, a couple private messages sent to me about this, because I was saying that we're likely going to see oil go up in price as we go towards the holiday season, and some people were saying, well, if you look back in history, it actually was the opposite. It would go down during the cold season, during Christmas and Thanksgiving, and normally you'd be right, but the reason why it's not going to happen this time is because of the U.S. is in a very sticky situation in regards to oil reserves. So because we're going to need more oil, looking outward rather than we have been inward during Trump's era. Because you got to remember, Trump, in the last couple years when Trump was president, he really focused on making sure that we were, more energy independent than the past. So our oil reserves were always brimming to the top. So we didn't really need to, in the U.S., import a lot of oil as we did in the past. And we were even looking to export, which also kept our prices lower. Now we're in the opposite situation. We're pretty much in the same situation that we have been pre-Trump with Obama and Bush. That now we are importing again, and the months are getting very cold, and we're also in a gridlock in regards to manufacturing and shipping because of, the East is going through a lot of geopolitical stuff, whether it's war, and then we also have China that's going in and out of COVID lockdowns every day. So everything is really gridlocked and slowed down. And not to mention, we're also now, it seems, in a political battle with Saudi Arabia. They're not very happy with us, and they are, they're doing everything they can regarding oil to really, twist the knife, leverage the U.S. government to give them more of whatever they want. And anytime, our government is trying to resist, they're making sure OPEC brings the pain. So we do have to keep in mind, oil is, the bargaining chip that most of the world and most of the first world countries are using to try and leverage one another. And unfortunately, the U.S. is no longer in a position where they can leverage their own oil reserves because we've given it away, quite most of it, actually. I think almost all of it. So we're in a tough spot. So I do think as we come into the colder months, especially if the current crises around the world aren't resolved, we're just going to see oil go up, and we'll probably see it in the hundreds and potentially even higher. Remember, we're in a really big structure for oil. I believe on the monthly, this is a bullish structure. We may actually, this descending structure, you see this lower descending trend line and then this upper descending trend line. I believe there's a larger bullish structure potentially on the monthly chart. So we may be seeing it come all the way back up towards the 110s as well. So we do have to be very careful here. But at the very least, I do see us getting back towards 100. All right, next is gold. So we'll take a quick look at gold and silver. So, gold, again, I will say this, it did surprise me a little bit today. I am, penciling in, it's very likely for this double bottom to get taken out. However, if we do close above this level like we are now, having this bullish engulfing candle, and then tomorrow we do hold above, pretty much the close of this daily candle, we may actually start seeing that breakout from this trend line. I am personally bullish on gold. Again, I'm just very, laid back from it. I'm not really touching it too much. I have some positions. If you're in the swing trade service or you're participating in the free trial, you're seeing I do have some gold, silver, and gold mining positions. But again, I'm not really messing with them and not really adding on to them because I'm waiting to see the gold ounce chart break this descending trend line. I do believe once it breaks this descending trend line, all systems are go, and we're going to see another nice rally in the metals, or at least in gold. So, I do think we're nearing the end, but we may need some more liquidity under this level. Just another streak down towards the 1600s to the 1580s, and then we may have enough to break through. But if we have enough now, if this was enough of a drop, this double bottom, and now we have enough to break through, I'm ready for it. We're in a great position personally. If you've been following these trades, for the breakout here, we just have to continue to be patient as we have been. All right, so next is silver. So silver having a great day as well, tapping this fair value gap up here. It's again, I do think that we're going to see silver eventually break towards this level here, actually break out from it. I'm skeptical. I think we're in a larger microphone structure here. So this ascending trend line and then this descending trend line is the larger structure. And then we're in an ascending structure here that eventually will probably break down once price gets back to it. But we may again be seeing that push higher to then try and break the highs here to grab the liquidity, tapping this trend line up here and then coming down. Either way, we're in a great spot. If silver wants to come up towards this level, it should push our silver position into the green, and then I'll be looking to close out that position as silver gets closer towards the upper trend line. But we are tapping these fair value gaps until we actually fill these out and start closing up higher above this level, about 20 20.66, 20.67, or 20.70. You do want to watch for these levels to get tapped and then a reversal back down to, challenge this ascending trend line. Okay, this is just small pockets of liquidity that's been left behind that the markets are trying to fill back up. All right, and last but not least, let's take a quick look at Bitcoin. So we'll take a quick look at Bitcoin, see what's going on here. So Bitcoin, again, I like how it's looking. It is fighting this larger imbalance here. And again, I do think we're in the process of going into a bullish consolidation. I think this is the beginning of it. We may start trading sideways for a couple of days, for the rest of this week and potentially some of next week. But if we can hold this structure, this flaggish structure that may be forming here, we'll eventually see enough fuel to break out higher and fill out this imbalance and eventually attack the liquidity that's pulled above this high pivot here. So overall, again, I like what I'm seeing. Just have to continue to be patient. I know we've been very, very patient with Bitcoin, but overall, I like what we're seeing. And if we do break down, all is not lost. Again, we want to see this fair value gap filled, and then we would like to start seeing a potential higher low forming from here to here. Okay, so let's just keep observing it. Overall, I do think this is a breakout, the potential beginning of a change of character. Now we just have to see if it can get some follow through to push up higher. And then obviously, if tomorrow ends up being a fairly bullish day, by the end of it, if the Fed does come out, more soft-handed, more dovish, then, probably going to see some nice bids on Bitcoin and maybe potentially start breaking past the 21.4, 21.5 zone and go even higher. All right, that's it for the day. All right, everyone, make sure that if you have any questions, you let me know. Make sure if you're going to follow the swing trade service to read the announcements, like I said, and I would love to get your feedback. Whether it's good or bad on the service. One of the reasons why I decided to make it free was also because I would like some feedback on it. If there's something I can improve on, or if the information's not clear enough, I would love to get that feedback. And yeah, if you do like the service, obviously, I hope you stick with it well after November. And yeah, all right, everyone, remember, be patient, be vigilant, and be nimble. I love you guys. Take care.